Welcome to the exciting world of collectible sneaker investments. In recent years, sneakers have rapidly transitioned from streetwear staples to high-value collectible items that can generate serious returns. For some, they're more than just footwear, they're assets. You might be wondering, how did sneakers, once a simple fashion statement, become investment-grade items that turn heads even in financial circles? Well, the answer is a fascinating blend of culture, exclusivity, and market dynamics. Why sneakers are turning heads in the investment world? Let's start with the basics. Sneakers are no longer simply sportswear. They're status symbols, cultural icons, and now, viable financial assets. Thanks to the influence of celebrities, athletes, and designers, limited edition sneakers have developed an aura of exclusivity and desirability. Each release attracts thousands, sometimes millions, of buyers who want to own a piece of history. These aren't just shoes, they're stories, symbols of status, and, most importantly, they're rare. And it's this scarcity that creates demand, driving up prices on the secondary market. In 2023 alone, the global sneaker resale market was valued at nearly $10 billion, and it's expected to continue growing at a rapid pace. People aren't just wearing these shoes, they're trading, selling, and even insuring them. While a few years ago this concept might have sounded unusual, today, sneakers are widely recognized as an investment class, a cultural phenomenon, and a major player in the alternative asset space. A brief history of sneaker culture and its rise to investment status. To truly understand the appeal of sneaker investments, we have to dive into the roots of sneaker culture. In the early 1980s, basketball players like Michael Jordan redefined the sneaker's role in fashion with iconic releases like the Air Jordan 1. What started as sports footwear soon crossed over into music, streetwear, and pop culture, creating a foundation for the rise of sneakerheads, passionate collectors who view these shoes as pieces of cultural art. Fast forward a few decades, and sneaker culture has exploded worldwide, with every major sports and luxury brand competing to make their mark. What makes sneaker culture so unique in the investment world is the way brands release their products. Limited editions, collaborations with famous designers or artists, and exclusive drops all create a sense of scarcity that fuels demand. Sneakers released in small quantities or under unique circumstances tend to appreciate over time, making them highly desirable assets. Collectible sneakers as an alternative investment. Why now? Why should you consider investing in sneakers now? In a time when the stock market can be volatile and traditional investments feel uncertain, people are looking for alternative ways to grow their wealth. Sneakers offer a unique opportunity because they blend tangibility and cultural significance with the potential for financial gain. They're physical, something you can hold, and they connect directly to popular culture, giving them intrinsic value beyond just numbers on a screen. With the rise of online resale platforms like StockX, GOAT, and eBay, it's easier than ever to buy, sell, and value sneakers. These platforms bring transparency and legitimacy to the market, allowing both novice and experienced investors to tap into the world of sneaker investments. And with data indicating strong growth projections, many believe the sneaker market isn't just a trend, it's here to stay. In this video, we'll dive deep into why collectible sneakers are becoming a viable alternative investment, how the market works, and how you can potentially profit from this rapidly growing asset class. So, whether you're a sneakerhead or just curious about unconventional investments, stay tuned, as we explore why the future of investments just might be in your closet. The rise of collectible sneakers in modern culture. To understand the appeal and value of sneaker investments today, we need to look back at how sneaker culture evolved and became embedded in modern pop culture. What was once merely a functional item for sports enthusiasts has transformed into a global cultural phenomenon, heavily influenced by music, fashion, sports, and social media. This section will take you through the journey of how sneakers have reached the heights of cultural prominence and investment potential. The origins. From sportswear to cultural icons, sneakers originally served one purpose: functionality in sports. In the early 20th century, sneakers were crafted for athletes, offering them specialized footwear for activities like basketball and running. Brands like Converse, with their famous Chuck Taylor All-Stars, and Adidas, with their focus on athletic performance, were pioneers. However, it wasn't until the 1980s that sneakers began evolving into something more than just athletic footwear, largely thanks to a basketball legend who changed the game, Michael Jordan. The launch of the Air Jordan 1 in 1985 marked a pivotal moment. Michael Jordan's success on the basketball court, combined with the innovative and bold design of the Air Jordan, made the shoe an instant hit. The Air Jordan line was among the first to break free from the purely functional purpose of sneakers and step into the world of fashion and status. People were lining up not just to buy basketball shoes, but to buy a piece of Jordan's legacy, establishing the idea of sneakers as symbols of status and style. Sneaker culture in the 90s and early 2000s. Hip-hop, skateboarding, and streetwear influenced the 1990s and early 2000s saw a boom in sneaker popularity, fueled by the rise of hip-hop culture and the growing streetwear movement. Rappers, hip-hop artists, and other cultural icons began wearing high-profile sneakers in music videos and concerts, bringing sneaker culture directly to the mainstream. Artists like Run DMC, who famously rocked Adidas Superstars, and later artists like Jay-Z and Kanye West, helped bridge the gap between sneakers and the music industry, pushing the status of sneakers to new heights. Around the same time, the skateboarding community also adopted sneakers as an essential part of their culture. Brands like Vans and Nike SB began creating unique, limited edition designs that resonated with skaters and casual fans alike. Sneakers began representing an identity, a connection to a specific subculture and a sense of belonging. The culture around sneakers evolved into one that celebrated individuality, creativity, and a sense of exclusivity. The role of collaborations and limited edition drops. One of the defining features of sneaker culture, particularly from the 2000s onward, is the concept of collaboration and limited edition releases. Recognizing the immense influence of popular designers, artists, and even athletes, brands began collaborating with high-profile figures to create unique, limited edition sneakers. Nike's partnership with designer Virgil Abloh and the Off-White x Nike collection redefined what sneaker collaborations could achieve. These drops generated massive hype, sold out within minutes, and were resold for thousands of dollars, sparking a new era of demand-driven sneaker culture. Collaboration drops have since become standard practice in the industry, with brands partnering with influential figures from all walks of life, including artists, designers, and celebrities. These limited edition collaborations create scarcity, making these shoes not only desirable but also valuable on the resale market. The exclusivity and limited availability turn these sneakers into rare collectibles, much like works of art or limited edition prints. The role of social media and online resale platforms in boosting sneaker popularity in the digital age. Social media has propelled sneaker culture to a global scale. Platforms like Instagram and TikTok are now filled with influencers and sneakerheads showcasing their latest pickups, sharing outfit inspiration, and building followings based on their sneaker collections. Social media has become a powerful tool for creating hype, allowing sneaker brands to directly engage with consumers and amplify the excitement around upcoming releases. Online resale platforms such as StockX, GOAT, and eBay have also played a significant role in making sneaker investments accessible. These platforms provide a secure, transparent marketplace where buyers and sellers can engage, making it easy to track price trends, authenticate products, and view market demand. With these platforms, sneakers have effectively become liquid assets that can be quickly bought and sold, further validating their role as an investment. How sneaker culture became an investment platform. While sneakers have always held value for collectors and enthusiasts, the advent of the resale market in the 2010s solidified their place as a legitimate investment. Sneaker releases became highly anticipated events, with thousands of people vying for the chance to buy a pair, not just to wear, but to flip for a profit. A single pair of limited release sneakers could be worth several times its retail price within hours of its release. Sneakers were no longer just a personal collectible, they were an appreciating asset. As sneaker resale grew, investors and financial analysts started to pay attention. Some investors began to recognize that sneakers had the potential to act as an alternative investment, similar to collectibles like art or vintage cars. Factors like scarcity, condition, and cultural relevance contributed to the increasing value of certain sneakers. Case in point, the sneakerhead community and its impact on investment trends. The term sneakerhead refers to passionate sneaker collectors and enthusiasts who often dedicate significant time, money, and effort to curate their collections. This community has its own ecosystem, where collectors actively trade, resell, and showcase their sneakers. Sneakerheads don't just influence trends, they shape them. Their buying decisions have a ripple effect on the market, driving demand and creating new standards of value. Today, the sneakerhead community is a major force in the industry, with millions of enthusiasts worldwide. The size and influence of this community have transformed sneakers from niche collectibles into mainstream investment opportunities. Financial advisors are even beginning to recommend collectible sneakers as part of diversified portfolios, acknowledging their potential for solid returns. The transformation of sneakers into status symbols and wealth indicators. The shift in how society perceives sneakers is one of the most fascinating aspects of this investment trend. What was once merely a functional item has evolved into a status symbol that signifies not just wealth, but cultural awareness and individuality. Collectible sneakers are now displayed in high-end boutiques, featured in fashion shows, and worn by influencers and celebrities as symbols of prestige. In today's world, owning a rare pair of sneakers isn't just a fashion statement, it's a signal of wealth, influence, and belonging to an exclusive cultural movement. The limited availability, high resale value, and cultural significance of collectible sneakers have elevated them to the status of luxury goods, attracting not only collectors but also investors seeking alternative ways to grow their wealth. The rise of sneaker culture is more than just a passing trend, it's a powerful cultural and economic force. From humble beginnings as sportswear to luxury collectibles worth thousands, sneakers have woven themselves into the fabric of modern culture and now represent an alternative investment with serious potential. In the next section, we'll delve deeper into the mechanics of sneaker investing, exploring what makes these shoes valuable and how you can start profiting from this rapidly growing market. Why sneakers? Understanding the investment potential. Now that we've covered the cultural significance of sneakers, let's dive into why sneakers hold substantial potential as an investment. Unlike traditional assets like stocks or real estate, sneakers offer a unique combination of tangibility, cultural relevance, and scarcity. But what exactly makes them valuable, and why are so many investors drawn to this unconventional asset class? The investment appeal. More than just shoes. For many investors, collectible sneakers offer something unique, a tangible, physical asset that can appreciate over time due to its cultural and aesthetic appeal. Sneakers provide the thrill of owning a piece of cultural history, and each pair comes with its own story and legacy. This makes them attractive, especially for those who may feel disconnected from traditional investment vehicles like stocks, which can seem abstract or complex. Sneakers combine aspects of art and fashion, making them collectible items with an emotional and cultural connection. This intrinsic appeal is valuable, as it drives demand beyond purely financial motives. For instance, someone may buy a pair of limited edition sneakers because of the connection to a favorite athlete, musician, or designer, which adds another layer to their investment. Scarcity. The supply and demand equation in sneakers. One of the primary drivers of sneaker value is scarcity. Much like precious metals or rare art, sneakers gain value from their limited availability. Sneaker brands carefully control the release of high-demand models, often producing only a limited number of pairs for each design. This scarcity fuels the hype around sneaker releases and ensures that demand consistently outstrips supply. Brands like Nike, Adidas, and Jordan leverage scarcity through exclusive drops, where a new model or collaboration is released in extremely limited quantities. These drops often sell out within minutes, creating an instant secondary market where buyers are willing to pay significantly higher prices. Limited editions and collaborations with celebrities or high-profile designers further drive this scarcity, making some sneakers highly coveted assets. The sneaker drop model and its role in value creation. The sneaker drop model has revolutionized the way sneakers are marketed and sold. By generating hype and exclusivity around each release, brands create a surge of demand that can often only be met in the secondary market. This drop model also creates a sense of urgency, encouraging buyers to act quickly before a model sells out. Brands often use social media and influencers to promote upcoming drops, building anticipation and hype. When the sneakers finally become available, there's a rush to purchase them, leading to immediate scarcity in the market. This phenomenon has become a predictable cycle, which in turn has created a highly active secondary market where collectors and investors can trade sneakers at premium prices. Comparing sneakers to traditional investments. When comparing sneakers to traditional investments, several unique factors stand out. Unlike stocks or bonds, sneakers are a physical, tangible asset that investors can see, touch, and display. This tangibility gives sneakers an aesthetic and cultural value that resonates with buyers, similar to art or luxury watches. And while traditional assets are influenced by economic indicators and corporate performance, sneaker values are influenced by trends, cultural relevance, and brand power. Additionally, sneakers don't follow the same economic cycles as stocks or real estate. During periods of market downturns, people may still invest in collectibles like sneakers, which are driven by demand rather than traditional financial indicators. This detachment from the broader economic market can make sneakers an appealing option for diversifying investment portfolios. What sets sneakers apart from other collectibles? While collectibles like art, wine, and vintage cars have long been popular among investors, sneakers offer unique advantages. First, they are more accessible, with entry points ranging from a few hundred to thousands of dollars. This wide range of price options allows both novice and experienced investors to participate in the market. Secondly, sneakers are deeply rooted in popular culture, meaning that their value isn't solely based on age or rarity but on cultural relevance. A new, hyped release by a major designer or collaboration with a celebrity can create instant demand and significant resale value. Unlike art or classic cars, sneakers also appeal to a younger generation who may not be able to afford traditional collectibles but can engage with sneaker culture. Understanding the secondary market, platforms and pricing trends. The secondary market is where sneakers truly shine as an investment. Platforms like StockX, GOAT, and eBay have made it easier for buyers and sellers to trade sneakers at market-driven prices. These platforms function similarly to stock exchanges, allowing users to view price histories, trends, and buy-sell orders, creating transparency in pricing and a sense of legitimacy. The resale market for sneakers has experienced exponential growth, with some releases appreciating by 200% to 500% within months of their launch. In 2023, StockX reported that several models of sneakers from brands like Nike and Adidas had outperformed traditional investment indices, highlighting the profit potential in this space. Unlike most collectibles, the resale of sneakers is facilitated by an online infrastructure that allows easy access, liquidity, and data tracking. Sneaker investment metrics. Evaluating value and growth potential. Investing in sneakers involves understanding specific metrics and trends that drive value. Key metrics include brand, model, collaboration, condition, and size. For instance, collaborations between Nike and high-profile designers like Travis Scott or Virgil Abloh often yield sneakers that appreciate in value due to their exclusivity and cultural significance. Another factor is the condition of the sneaker. Sneakers in pristine, dead stock condition, new and unworn, hold the highest value, especially for collectors. Packaging, original tags, and box condition also affect the value, as collectors and resellers seek shoes that are as close to original condition as possible. Lastly, the size of the sneaker can impact its resale value. Popular sizes that fit a broad range of buyers tend to be more valuable, as they appeal to a wider market. Smaller or very large sizes may be more challenging to sell, but for certain limited edition releases, even these sizes can command high prices. Case study, the Air Jordan 1 and its investment journey. The Air Jordan 1 is a prime example of a sneaker with long-term investment potential. Originally released in 1985, the Air Jordan 1 has remained relevant due to its cultural significance, association with Michael Jordan, and frequent re-releases. Today, certain original or limited edition models of the Air Jordan 1 can sell for thousands of dollars. For instance, the Chicago colorway of the Air Jordan 1 has become one of the most valuable sneakers in the world, with some pairs reselling for over $10,000. This appreciation demonstrates the investment potential of certain iconic models, where historical significance and limited supply drive significant value in the resale market. What investors should know: risks and rewards of sneaker investing. While sneaker investments can be profitable, they come with risks. The resale market can be volatile, with prices fluctuating based on trends, cultural shifts, and changes in demand. For example, certain collaborations or models may lose value if demand wanes or if too many similar models are released. Additionally, sneaker value is highly susceptible to the risks of counterfeit products, making it essential to use reputable resale platforms that authenticate items. Another consideration is the condition and maintenance of the sneakers. Unlike stocks or digital assets, sneakers are physical items that can deteriorate over time if not properly stored. Environmental factors like temperature and humidity can damage materials, affecting resale value. This adds a level of complexity to sneaker investments, as owners need to store their sneakers in optimal conditions to preserve their value. Sneakers are much more than just fashion items. They're collectibles that offer a unique investment potential. Their scarcity, cultural significance, and the thriving secondary market make them appealing to investors looking for alternative assets. However, understanding the factors that drive value, the dynamics of the secondary market, and the potential risks are essential for success in sneaker investing. In the next section, we'll explore the actual process of sneaker investing, diving into the mechanics of buying, selling, and building a sneaker portfolio that can generate returns. Stay tuned as we go deeper into the strategies and tactics that can help you succeed in this unconventional investment arena. The mechanics of sneaker investing. Now that we've explored the appeal and investment potential of collectible sneakers, it's time to understand the actual mechanics of investing in this unique asset. Sneaker investing involves more than just purchasing a pair of shoes. It requires research, an understanding of market dynamics, and knowledge of where and how to buy and sell. This section will walk you through the practical steps of becoming a successful sneaker investor, including choosing the right platforms, evaluating sneakers for investment potential, and maximizing profits. Getting started. Essential knowledge for new sneaker investors. Getting started in sneaker investing begins with building a solid foundation of knowledge about the market. Sneaker values fluctuate based on trends, brand popularity, and cultural relevance, so staying informed is key. As with any investment, understanding the market and setting realistic expectations will help you make smarter buying and selling decisions. Begin by familiarizing yourself with brands that hold value in the resale market, such as Nike, Adidas, and Jordan. These brands frequently release limited edition models that can appreciate over time. Track trends and hype cycles, as sneakers often follow cycles where certain models or collaborations are highly anticipated, driving up demand. Platforms like Hypebeast and Sneaker News are valuable resources for insights into upcoming releases, collaborations, and industry trends. How to choose the right platform for buying and selling. Choosing a reputable platform is one of the most important steps in sneaker investing. Each platform has unique features, fees, and buyer-seller protections, so understanding the options will help you select the best one for your needs. StockX, for example, is often considered the stock market of sneakers. It provides a transparent and secure marketplace for buyers and sellers, with features that include price histories, bid and ask prices, and recent sale prices, giving a clear view of each sneaker's market value. GOAT is another popular platform, offering an extensive selection of sneakers and a robust authentication process to prevent counterfeits. GOAT also provides a used market, allowing buyers to find discounted options. eBay has long been a go-to marketplace for sneakers, and recent updates have introduced an authenticity guarantee for high-value sneakers. It offers a wide range of listings, from new to pre-owned, and is known for its global reach. Lastly, Flight Club, known for its physical locations and online presence, specializes in high-end sneakers and limited releases. It attracts a specific niche of buyers, which can be advantageous for reselling premium items. Each platform charges different fees, typically ranging from 8% to 12%. So consider these costs, along with the platform's reach, reputation, and user interface, to decide which one aligns with your investment goals. Evaluating sneakers for investment potential. To make profitable decisions, it's essential to evaluate each sneaker's investment potential based on several key factors. Certain brands, such as Nike and Adidas, have a strong resale market due to their legacy and cultural significance. Models like Air Jordans, Yeezys, and Nike Dunks consistently hold value because of their high demand. Collaborations with well-known designers, artists, or celebrities can significantly boost a sneaker's value. For example, Nike's collaboration with Off-White by Virgil Abloh created some of the most valuable sneakers on the market. Limited edition releases, especially those with low production numbers, are often highly sought after in the resale market. Checking production numbers or gauging the level of exclusivity can help estimate future value. Condition is also crucial. Dead stock sneakers, new and unworn, in original packaging fetch the highest prices. Popular sizes, like 9 to 11, are easier to resell, while rare sizes may appeal to niche collectors but can be harder to sell quickly. By considering these factors, you can assess the likelihood of a sneaker appreciating in value over time and make better informed investment decisions. The buying process. Strategies for securing high-value sneakers. Once you've identified sneakers with high investment potential, the next step is to acquire them. Limited edition sneakers are often difficult to purchase at retail price due to high demand, so timing and strategy are essential. Most major brands and sneaker retailers use a raffle or drop system to distribute limited releases, and signing up for these raffles gives you a chance to purchase sneakers at retail price, which is typically much lower than the resale value. Registering on multiple platforms, including Nike and Adidas, as well as third-party retailers, increases your chances of winning. Stay updated on release schedules using apps and websites like SNKRS, Nike's exclusive release app, and Soul Collector. Some experienced sneaker investors even use automated software, or bots, to increase their chances of purchasing limited edition sneakers during drops. However, using bots can be risky, as many retailers actively work to block them. If you're unable to secure a sneaker at retail price, secondary marketplaces like StockX or GOAT provide access to these shoes at resale prices. Although prices will be higher, secondary platforms ensure authenticity, which is crucial when dealing with high-value items. Selling strategies. Maximizing profits in the resale market. Timing is critical when selling sneakers in the resale market. Demand for limited edition sneakers is often highest in the weeks following a release, with prices peaking as buyers who missed out on the initial drop are willing to pay a premium. Monitoring price trends on platforms like StockX can help you determine the best time to sell, as these platforms offer historical price data showing how values fluctuate over time. Expanding your listing across different resale platforms increases your chances of reaching a buyer quickly, as each platform has a different audience. Some iconic sneakers appreciate steadily over time, similar to long-term investments. High-profile models like the Air Jordan 1, Chicago, or Yeezy Boosts may increase in value over the years, making them valuable for long-term holding. Building a diversified sneaker portfolio. Building a diversified sneaker portfolio is essential to managing risk and maximizing returns. Include both highly sought-after models that can yield immediate profits and mid-range sneakers that have steady resale value. High-value sneakers can be flipped quickly, while mid-range models provide stability. Experimenting with other brands or lesser-known collaborations can provide unexpected returns, as New Balance, for instance, has recently gained traction with limited releases, creating new opportunities. Some investors focus on specific types of sneakers, like skateboarding shoes or vintage models. Niche markets can sometimes yield higher returns due to lower competition and dedicated buyer communities. Storing and preserving your sneaker investments. Maintaining the value of collectible sneakers requires proper storage and care. Store sneakers in a climate-controlled environment to prevent damage from excessive heat, humidity, or cold, which can damage materials and decrease value. Proper containers, such as original boxes or clear, stackable containers, keep them organized and protected. Avoid exposure to direct sunlight to prevent discoloration. Humidity can lead to mold and material degradation, so use silica gel packets or other moisture control products to keep sneakers dry. Risks to watch out for in sneaker investing. While sneaker investing can be lucrative, it comes with risks that all investors should consider. The resale value of sneakers can be unpredictable, with some models losing value over time due to market saturation or shifting trends. Additionally, counterfeit sneakers are a common problem in the resale market, so ensure authenticity by using reputable platforms. Unlike digital assets, sneakers require proper care to maintain their value, and without proper storage, sneakers may degrade, which can lower resale value. The mechanics of sneaker investing involve a combination of research, strategic buying and selling, and portfolio management. By understanding how to assess value, secure desirable sneakers, and time the market, you can navigate the sneaker resale industry with confidence. With the right strategy, you can build a profitable portfolio in this unique and dynamic market. Case studies, high-value sneakers and their market journey. One of the best ways to understand the dynamics of sneaker investments is to look at specific cases where certain models became exceptionally valuable assets. Through these examples, we can analyze what factors contributed to their success in the resale market, helping us identify the characteristics of potentially profitable sneakers. Case study number 1. Nike Air Jordan 1. From basketball court to luxury collectible, the Nike Air Jordan 1, released in 1985, represents a landmark in sneaker culture. Originally designed for basketball and worn by NBA legend Michael Jordan, the Air Jordan 1 not only revolutionized sportswear but also redefined fashion and style. The sneaker's history began when the NBA fined Jordan for wearing them because they didn't adhere to the league's uniform policy. Nike took advantage of this controversy by promoting the shoes as rebellious, giving them an edge in the public eye. Over the years, the Air Jordan 1 has been released in multiple colorways, each holding its own place in sneaker culture. Among the most valuable is the Chicago colorway, an iconic red, white, and black design tied to Jordan's legacy. Original pairs and specific editions of the Chicago colorway can fetch thousands of dollars in the resale market, with some pristine versions reaching prices of $10,000 or more. The story of the Air Jordan 1 illustrates how cultural impact, athlete association, and nostalgia can significantly elevate a sneaker's value. Collectors and investors are drawn not only to the design but also to the history and legacy that each pair represents. The Air Jordan 1's transformation from a banned basketball shoe to a luxury collectible demonstrates the potential for long-term appreciation, especially for models with historical and cultural significance. Case study number 2. Yeezy Boost 350. Kanye West's influence on sneaker culture. The Yeezy Boost 350, developed by Adidas in collaboration with Kanye West, brought a new wave of excitement to the sneaker market. Launched in 2015, the Yeezy Boost 350 was unlike any other sneaker at the time, combining high-end aesthetics with innovative Adidas Boost technology, which offered a unique blend of comfort and style. Kanye West's influence in fashion and music made the Yeezy line a must-have for sneaker enthusiasts, establishing a dedicated following. When the Yeezy Boost 350 hit the market, it sold out almost instantly. The hype surrounding the shoe, fueled by Kanye West's popularity and the scarcity of each release, created enormous demand in the secondary market. Early colorways of the Yeezy Boost 350, such as the Turtle Dove and Pirate Black, saw resale prices soar, with some pairs going for $2,000 or more, a considerable markup from the original retail price of around $200. The Yeezy Boost 350's success highlights the impact of celebrity collaborations and limited supply. Kanye West's personal brand, combined with Adidas' strategic scarcity model, contributed to the shoe's long-term value. This case study demonstrates how influence, exclusivity, and innovative design can drive high demand and substantial returns for investors. Case study number 3, Off-White x Nike, how Virgil Abloh redefined sneaker collaborations. The collaboration between Nike and the late designer Virgil Abloh's brand, Off-White, created a cultural phenomenon that reshaped the sneaker industry. Abloh's reinterpretation of classic Nike models, including the Air Jordan 1, Air Presto, and Air Force 1, brought a new aesthetic that blended deconstruction with streetwear. Released as part of the 10 collection, these sneakers featured unique design elements like exposed stitching, zip ties, and bold text graphics. The Off-White x Nike collaboration generated unprecedented demand. The Air Jordan 1 Chicago from this collection, for example, became one of the most coveted sneakers in the world, with resale prices reaching $4,000 or more. Abloh's design philosophy and attention to detail, combined with Nike's branding, created an immediate collector's item. This case study emphasizes the power of creative collaborations in adding value to sneakers. Abloh's unique design approach and Nike's brand heritage appealed to both high fashion enthusiasts and streetwear fans, driving up demand and making the Off-White x Nike collection a lucrative investment for those who managed to secure pairs at retail. Case study number 4, Nike Mag, a sneaker designed for collectors. The Nike Mag is perhaps one of the most iconic examples of a sneaker created solely for collectors and investors. Inspired by the self-lacing shoes worn by Michael J. Fox's character, Marty McFly, in the movie Back to the Future Part 2, the Nike Mag was released in very limited quantities in 2011 and 2016. Unlike most sneakers, the Nike Mag was not made for athletic use. Rather, it was designed as a collector's item, with proceeds going to charity. The limited release, coupled with the cultural significance of Back to the Future, made the Nike Mag an instant grail for collectors. Some pairs from the 2016 release, which featured actual self-lacing technology, have sold for over $40,000. The rarity and novelty of the Nike Mag make it a unique asset, one that is largely detached from the standard sneaker market and instead driven by pop culture and nostalgia. The Nike Mag case study showcases how brand storytelling, pop culture ties, and ultra-limited releases can drive exceptional value in the resale market. It highlights the potential for non-traditional sneakers to become high-value collectibles, especially when they have unique design elements and significant cultural connections. Case study number 5. New Balance 550. The resurgence of a classic model. The New Balance 550 is a more recent example of a classic model that found new life and value in the resale market. Originally released in 1989, the New Balance 550 was a basketball sneaker that didn't gain much traction at the time. However, New Balance re-released the model in collaboration with the streetwear brand Aimé Leon Dore, creating a retro-inspired sneaker that captured the attention of the fashion world. This revival of the New Balance 550 in a limited edition collaboration helped establish the sneaker as a desirable item, with resale prices often doubling or tripling the retail cost. The New Balance 550 exemplifies how vintage models can become valuable when reintroduced with a modern twist and strategic collaboration. The success of the 550 underscores the appeal of nostalgia, especially when combined with contemporary design influences and partnerships with influential brands. Insights and lessons learned from these case studies. These case studies illustrate several important factors that can significantly enhance a sneaker's investment potential. The most common elements contributing to high resale value include cultural significance, celebrity or designer collaborations, limited production runs, and strong brand heritage. Each of these case studies also highlights the impact of strategic marketing and hype in creating demand, which is essential for any collectible item to gain long-term value. For investors, these examples provide insights into the characteristics of sneakers likely to appreciate over time. Sneakers tied to cultural icons or historical moments often retain their value due to the emotional connection they hold with fans. Similarly, collaborations that introduce unique designs, especially with limited production numbers, are almost always profitable. This combination of scarcity, unique design, and cultural relevance creates the perfect storm for a high-value sneaker. Additionally, these case studies demonstrate the importance of timing. Sneakers like the Nike Air Jordan 1 or Yeezy Boost 350 had peaks in demand soon after release, which allowed early investors to realize quick profits. However, certain models, like the Nike Mag, are worth holding over the long term, as their rarity and cultural significance drive continued appreciation. Understanding when to sell based on market trends and consumer demand is crucial for maximizing returns in sneaker investing. Through these case studies, it's evident that sneaker investments are shaped by a variety of factors, from cultural significance and celebrity influence to limited supply and innovative design. These examples illustrate the potential for sneakers to become high-value assets, showing that with the right research, strategy, and understanding of market dynamics, investors can find opportunities in this unique asset class. In the next section, we'll explore the financial side of sneaker investing, examining data on growth trends, market statistics, and profit margins. By understanding the numbers, you'll gain a clearer picture of the potential returns and risks associated with sneaker investing. Stay tuned as we dig into the numbers and see why sneakers are increasingly being recognized as a viable alternative investment. The numbers behind sneaker investments. In this section, we'll explore the financial aspects of sneaker investing. Understanding the data behind sneaker resale prices, market growth, and potential profit margins is essential for any investor aiming to enter this market. Sneaker investing is not just about buying trendy footwear, it's about leveraging market trends, understanding demand patterns, and recognizing which sneakers are likely to yield the best returns. Here, we'll dive into key statistics, industry growth projections, and challenges within the sneaker investment landscape. Market growth and resale value trends. The sneaker resale market has seen exponential growth over the last decade. In 2023, the global sneaker resale market was valued at nearly $10 billion, and analysts project continued growth at a rapid rate. Projections suggest that by 2030, the market could exceed $30 billion, driven by rising interest in collectible sneakers, expanding secondary marketplaces, and the mainstream acceptance of sneaker culture. This remarkable growth has been fueled by key factors, including the strategic use of limited edition releases, celebrity collaborations, and cultural shifts towards streetwear and casual fashion. Resale prices for popular sneakers have been known to skyrocket within hours or even minutes of release. Limited edition releases, such as the Air Jordan 1 or Yeezy Boost models, can appreciate by 200% to 500% shortly after their launch. For example, a sneaker that retails for $200 may quickly reach a resale price of $600 to $1,000, depending on demand. This rapid price inflation makes sneakers one of the few consumer goods that can yield such immediate returns. Online resale platforms like StockX and GOAT have helped standardize pricing and create transparency in the market. StockX, often referred to as the stock market of sneakers, provides a record of each sneaker's price history, giving investors data on pricing trends, demand fluctuations, and resale value patterns. This level of transparency has legitimized sneaker investing, allowing investors to monitor resale prices and make data-informed decisions on when to buy or sell. Profit margins. How much can you make? Profit margins in sneaker investing vary widely, but certain releases have shown potential for substantial returns. Generally, a sneaker with a high resale value will provide profit margins between 100% and 300% within days or weeks of release. For example, limited edition Yeezys or Jordan models released for around $200 can reach resale values of $500 to $1,500, depending on the model, size, and market demand. Some investors report making 10 to 20 times the original retail price on ultra-rare releases, such as the Nike Mag or certain Off-White x Nike collaborations. The sneakers that yield the highest profits tend to be those with unique collaborations, low production numbers, or iconic status. Collectors and investors often flock to sneakers that feature collaborations with influential designers, artists, or athletes, as these tend to generate significant resale value. Another factor that can impact profit margins is the timing of the sale. Some sneakers hit peak demand shortly after release, while others appreciate more steadily over time. Knowing when to sell is crucial for maximizing profit margins. Key demographics. Who's driving the market? The sneaker resale market is driven largely by young, fashion-conscious consumers, particularly millennials and Gen Z. Studies have shown that nearly 50% of sneaker investors are under 35 years old, with many drawn to the intersection of streetwear, pop culture, and financial returns. These consumers are motivated by more than just profit. They see sneakers as symbols of status and personal identity, making them willing to pay premium prices for rare and collectible models. This younger demographic's enthusiasm for sneaker culture and investing has made it one of the most dynamic and fast-growing segments in the fashion industry. Additionally, the sneaker resale market has seen a significant increase in international buyers. While sneaker culture has strong roots in the United States, the market is expanding in Europe, Asia, and the Middle East. Countries like China and Japan have particularly active sneaker markets, with a growing number of investors and collectors. The global reach of platforms like GOAT and StockX has helped fuel this international demand, allowing sneakers to become a worldwide investment phenomenon. Financial forecasts. What does the future hold? The future of sneaker investing looks promising, with multiple financial analysts predicting steady market growth. Industry forecasts project a compound annual growth rate, CAGR, of around 10–15% over the next decade, driven by continued interest in streetwear culture, the influence of celebrity endorsements, and a rise in limited edition collaborations. Additionally, brands are increasingly looking at innovative technologies, such as NFTs, non-fungible tokens, to authenticate and track ownership of collectible sneakers, which could add a new layer of value and security to sneaker investments. The increase in online resale platforms and the introduction of apps that verify sneaker authenticity have brought further legitimacy to the market. This trend is expected to attract more institutional and casual investors alike. Moreover, as these platforms develop, they may incorporate additional features like fractional ownership, allowing investors to buy and trade shares in high-value sneakers without needing to purchase the full item. This would democratize access to the sneaker market, making it easier for smaller investors to participate. Challenges and risks in sneaker investing. While sneaker investments can be profitable, the market is not without its challenges. One of the main issues is market volatility. Resale prices can fluctuate based on trends, cultural shifts, and even economic conditions. Certain models that are initially hyped may lose value if consumer interest fades or if similar models flood the market. This volatility means that investors need to stay updated on trends and be prepared for fluctuations in value. Another significant risk is the issue of counterfeit sneakers. The popularity of sneaker investing has led to a rise in counterfeits, which can be difficult to detect, especially for high-value models. Using reputable resale platforms like StockX or GOAT, which offer authentication services, is crucial for avoiding fake sneakers. Additionally, buyers should be aware of storage risks, as sneakers are physical assets that can degrade over time if not stored in optimal conditions. Deterioration of materials like leather, suede, or foam can affect resale value, so proper storage and preservation are essential to maintaining a sneaker's worth. Another challenge for investors is the competition to purchase limited releases at retail price. Due to high demand, it can be difficult to secure sneakers during initial drops, with many consumers resorting to using automated bots or relying on resale platforms to access limited edition pairs. For investors who cannot obtain sneakers at retail, the markup on the resale market can reduce profit margins, making it essential to act quickly and strategically. The numbers behind sneaker investments reveal a dynamic and fast-growing market with significant potential for profit. High demand, expanding resale platforms, and a global consumer base make sneakers an attractive alternative investment. However, the market is also subject to volatility and risks, including counterfeits and storage concerns. By understanding the financial trends, consumer demographics, and potential challenges, investors can approach sneaker investing with a balanced perspective, maximizing returns while mitigating risks. In the next section, we'll examine strategies for successful sneaker investing, including tips on portfolio diversification, timing purchases and sales, and ways to reduce risks. Whether you're a seasoned investor or new to sneaker investing, these strategies will help you navigate the market with greater confidence and profitability. Strategies for successful sneaker investing. Sneaker investing requires more than just a love for footwear. It takes strategy, timing, and an understanding of market dynamics to maximize returns. In this section, we'll dive into key strategies that can help you become a successful sneaker investor. From building a diversified sneaker portfolio to timing your purchases and managing risks, these tips will provide a roadmap for navigating the sneaker investment landscape. Building a diversified sneaker portfolio. As with any type of investment, diversification is crucial in sneaker investing. A well-rounded sneaker portfolio balances high-value, iconic models with more accessible, steady performers, allowing you to manage risks and capitalize on different areas of the market. One approach to diversification is including a mix of high-demand sneakers from established brands like Nike, Adidas, and Jordan, which are known for maintaining value over time. Models such as the Air Jordan 1, Yeezy Boost 350, and Nike Dunk consistently attract resale interest, providing a stable foundation for your portfolio. Additionally, consider adding sneakers from rising brands or collaborations, such as New Balance X Aimé Leon Dore or collaborations with popular streetwear brands. These less mainstream options often present high potential for appreciation as they gain traction in the resale market. Diversifying your portfolio also means considering sneakers from different price points. High-value, limited edition releases might yield significant returns, but mid-range sneakers with moderate resale value can provide more consistent income. By balancing between quick flip opportunities and long-term holds, you'll create a portfolio that can adapt to market trends and maintain steady profitability. Timing your purchases and sales. Timing is everything in sneaker investing. Understanding the best times to buy and sell can make a big difference in profit margins. Generally, sneakers are most valuable in the period immediately following their release, as hype and demand are at their peak. For many limited edition models, resale prices tend to be highest within the first few weeks of release, making it an ideal time for short-term investors to sell. For long-term investments, however, it can be advantageous to hold certain sneakers for months or even years, especially if they're iconic models with strong historical value, like the Air Jordan 1 or Yeezy Boosts. Over time, these sneakers may appreciate steadily as their scarcity increases and cultural relevance remains strong. Tracking market data and studying price trends on platforms like StockX can provide insights into when demand is likely to peak, helping you determine the optimal time to sell. When it comes to buying, monitor resale prices and aim to buy during price dips. Secondary market platforms offer valuable price histories, which reveal patterns of fluctuation for specific models. Buying during low demand periods can allow you to capitalize on lower prices, setting you up for higher margins when demand rises again. Utilizing online resale platforms. Effectively leveraging online resale platforms like StockX, GOAT, and eBay is essential for successful sneaker investing. Each platform provides unique features and user bases, allowing you to reach a broader market. For example, StockX offers real-time price data, similar to a stock market, making it easy to track sneaker values and monitor trends. GOAT has a strong reputation for authenticity, attracting buyers willing to pay premium prices for verified sneakers, while eBay's large user base provides global reach. When selling sneakers, consider listing on multiple platforms to maximize exposure. Each platform has a different audience, and casting a wide net can increase your chances of a quick and profitable sale. Be mindful of platform fees, which typically range from 8% to 12%, and factor them into your pricing strategy to ensure you're achieving desired profit margins. Reducing risks. Avoiding counterfeits and managing storage. Sneaker investing comes with inherent risks, including the threat of counterfeit sneakers and the need for proper storage to maintain condition. To avoid counterfeits, always use reputable resale platforms like StockX or GOAT, which offer authentication services. When buying from individual sellers, especially for high-value sneakers, insist on proof of purchase or seek out verified sellers with good ratings and reviews. Storage is another critical aspect of sneaker investing, as condition significantly affects resale value. Keep your sneakers in a climate-controlled environment to protect them from extreme temperatures, humidity, and sunlight, which can degrade materials. Use clear, stackable containers or original boxes to keep them organized and secure. Avoid exposure to direct sunlight, as it can cause fading and discoloration. To prevent moisture damage, use silica gel packets or other moisture-absorbing products inside the storage containers. Understanding and managing market volatility. Like any investment market, the sneaker resale market experiences volatility. Consumer preferences can shift, and the popularity of specific models or collaborations can fluctuate based on trends, celebrity influence, and brand decisions. For example, while Yeezy sneakers were once at the peak of popularity, changes in brand collaborations or consumer interest can impact their resale value. To manage market volatility, stay informed about trends and developments within the sneaker and streetwear industries. Follow news from popular platforms like Sneaker News, Complex, and Hypebeast to track upcoming releases and collaborations, as well as shifts in consumer interest. Having a diversified portfolio also mitigates the impact of volatility, as a mix of high-demand and steady-performing sneakers can balance out fluctuations. Additionally, some investors focus on niche markets within the sneaker world, such as skateboarding shoes or retro models, which may be less susceptible to major market shifts. Niche markets can offer stability and attract dedicated buyer communities, creating a buffer against sudden market changes. By being adaptable and open to various segments within sneaker investing, you can reduce the effects of volatility and protect your investments. Networking and building a sneaker community. Networking is a valuable tool for sneaker investors, as building connections within the sneaker community can lead to exclusive opportunities and insider knowledge. Joining online sneaker forums, attending events, and connecting with other collectors or investors can provide early insights into upcoming releases, limited drops, and resale price projections. Additionally, networking with retailers or resale platform staff can sometimes provide access to exclusive drops or early notifications about restocks. Engaging with a community of like-minded individuals also provides a support network, where you can exchange tips, stay updated on market trends, and collaborate on deals. Staying updated with technology and industry innovations. The sneaker industry continues to evolve, and keeping up with technological innovations and industry changes can help you stay ahead in the market. For instance, blockchain and NFTs are increasingly being integrated to authenticate and track high-value sneakers. Some brands and platforms are exploring the use of digital certificates of authenticity, allowing buyers to verify ownership and origin, which adds an extra layer of security and value to collectible sneakers. Emerging trends like virtual sneakers and augmented reality experiences are also reshaping the industry. Some companies are creating virtual sneaker assets that can be worn in digital worlds, allowing collectors to invest in digital as well as physical sneakers. Understanding these technological advancements can provide you with a broader perspective on future opportunities in sneaker investing. Successful sneaker investing requires a blend of strategic planning, market awareness, and adaptability. By building a diversified portfolio, timing your purchases and sales, using reputable platforms, and managing risks, you can navigate the sneaker market with greater confidence and profitability. Staying connected within the sneaker community, keeping up with industry trends, and embracing new technologies will further enhance your ability to capitalize on this unique investment opportunity. In the next section, we'll explore the future of sneaker investments and emerging trends, including the role of blockchain, NFTs, and potential changes in consumer preferences. These insights will give you a glimpse into where the sneaker investment market may be headed and what opportunities and challenges might lie ahead. Stay tuned as we look toward the future of sneaker investing and what it means for investors. Controversial insights. Sneaker investing versus traditional assets. Sneaker investing has made headlines as a rising alternative investment, but how does it compare to traditional assets like stocks, real estate, and precious metals? While sneaker investments can offer unique advantages, they also come with their own set of challenges and risks. In this section, we'll explore the controversial aspects of sneaker investing, analyzing both the pros and cons compared to more conventional investment options. By understanding these differences, you can make informed decisions about where sneakers fit into your overall investment strategy. The appeal of tangible assets. One of the main reasons investors are drawn to collectible sneakers is their tangibility. Unlike stocks or bonds, which are abstract and exist only as numbers on a screen, sneakers are physical, collectible items that can be held, displayed, and admired. For many investors, especially younger generations, this physical connection to an asset adds a layer of satisfaction. Sneakers represent a blend of art, culture, and personal style, making them not just a financial investment but also a cultural one. Traditional assets, such as stocks or real estate, lack this cultural and aesthetic appeal. While they are often seen as safer or more stable investments, they don't provide the same level of personal connection and enjoyment that sneakers offer. This emotional value can drive up demand for collectible sneakers, as investors see them as a way to diversify their portfolio while owning a piece of modern culture. Comparing volatility and market stability. Sneaker investments are often considered more volatile than traditional assets. Prices in the sneaker resale market can fluctuate based on trends, brand decisions, and consumer preferences, creating a less predictable investment environment. For example, a sneaker that initially has high resale value could lose its demand if the brand oversaturates the market with similar models or if a once popular collaboration falls out of favor. This volatility makes it essential for sneaker investors to stay informed about industry trends and to make quick decisions based on market conditions. In contrast, traditional assets like stocks and bonds generally follow broader economic indicators and are less influenced by consumer trends. While stocks are still subject to market volatility, especially during economic downturns, their performance tends to correlate more with the health of the economy and less with pop culture or trend cycles. Real estate, too, is often seen as a more stable asset class, as property values tend to appreciate over the long term. The stability of these traditional assets makes them attractive for risk-averse investors who prioritize consistency over potential short-term gains. Return on investment, ROI, sneakers versus stocks. The potential ROI on sneakers can be surprisingly high, especially for limited edition models and collaborations. As mentioned earlier, some high-demand sneakers can appreciate by 200% to 500% within a short period after release. In contrast, stocks typically yield average annual returns of 7–10% in the long term. While certain stocks can generate significant returns, such as high-growth tech stocks, they rarely offer the rapid price inflation seen in the sneaker market. However, sneaker investments require more active management. Investors need to monitor the market regularly, tracking trends and knowing when to buy and sell. Unlike traditional stocks, which can often be held for years with minimal intervention, sneaker investments may require frequent buying and selling to capitalize on short-term value spikes. This makes sneaker investing more similar to day trading or flipping in the real estate market, where timing and market insight are crucial to maximizing profits. Liquidity. The ease of buying and selling. Liquidity is a key consideration for any investment. Stocks and bonds are generally highly liquid, meaning they can be quickly sold on public exchanges. Real estate, while less liquid than stocks, still benefits from a robust market where transactions are common, and buyers are generally available. Sneaker investments have variable liquidity, heavily dependent on the model and demand. For high-demand sneakers, platforms like StockX and GOAT provide liquidity, making it relatively easy to sell desirable models at market-driven prices. However, lesser-known or lower-demand sneakers can be harder to sell, especially if demand for that specific model wanes. This limited liquidity can create challenges for sneaker investors who want to quickly offload their assets. Additionally, platform fees on resale sites can impact overall returns. Selling on StockX, for example, involves a fee structure that typically ranges from 8% to 12%, which can cut into profits. For investors who prioritize liquidity, these fees may be a deterrent, as they can reduce the net returns compared to traditional investments that often have lower transaction fees. Ethical and environmental concerns. One controversial aspect of sneaker investing is the ethical and environmental impact of sneaker production and resale. The mass production of sneakers, particularly limited edition models that create artificial scarcity, has raised questions about waste and environmental sustainability. Sneaker production involves significant water use, plastic, and synthetic materials, which contribute to environmental degradation. Furthermore, the hype-driven nature of the sneaker industry encourages fast fashion behaviors, with consumers often buying and selling sneakers rapidly. In contrast, traditional assets like stocks, bonds, and even real estate generally have less direct environmental impact. While companies within the stock market are subject to environmental concerns, the act of investing in stocks itself doesn't involve physical production or contribute to consumer waste in the same way that sneaker reselling does. For socially conscious investors, these ethical considerations may be a deciding factor in whether to engage in sneaker investing. Sneakers as a long-term asset, fad or future. One of the biggest debates in sneaker investing is whether the market will have long-term staying power or if it's simply a trend fueled by current pop culture. While the sneaker market has shown resilience and growth over the past decade, some skeptics argue that it could be a bubble, especially given its reliance on trends and consumer hype. If consumer tastes shift or if sneaker brands reduce their limited edition releases, the market's demand and value could diminish. On the other hand, advocates of sneaker investing believe that sneakers will continue to be valuable as a cultural artifact, much like classic cars, art, or vintage watches. They argue that certain iconic sneakers, particularly those tied to influential figures or historical moments, will maintain or even increase in value over time. Collectors are likely to continue valuing these items for their cultural and nostalgic significance, potentially solidifying sneakers as a permanent niche within the investment world. Potential for mainstream acceptance as sneaker investing gains popularity. Some financial experts suggest that it could eventually be integrated into more traditional investment portfolios. With the rise of fractional ownership platforms and digital authentication methods like blockchain, it's becoming easier for investors to buy and sell shares in high-value sneakers without purchasing the entire item. This accessibility could push sneaker investing toward mainstream acceptance, especially among younger generations who are already familiar with the market. Institutional investors and wealth management firms may also begin to recognize sneakers as part of the broader collectible and alternative asset class. This shift could bring increased legitimacy to sneaker investing, similar to how other collectibles, like art and wine, have been incorporated into high-net-worth portfolios. Sneaker investing is a fascinating, albeit controversial, alternative to traditional assets. While it offers the appeal of tangible assets, high short-term returns, and cultural relevance, it also presents challenges, including volatility, limited liquidity, and ethical concerns. Comparing sneakers to traditional assets highlights these contrasts and illustrates that while sneakers may not replace stocks or real estate, they can serve as a unique addition to a diversified portfolio. In the next section, we'll look to the future of sneaker investments, exploring emerging trends and potential innovations, including the integration of blockchain for authentication, NFT sneakers, and the impact of digital and virtual fashion. These insights will help you understand where sneaker investing might be headed and what opportunities and challenges could arise as the market evolves. Future trends in sneaker investing. As sneaker investing grows in popularity, the market is evolving with new technologies, shifting consumer interests, and emerging global trends. In this section, we'll explore the future of sneaker investments, looking at how innovations like blockchain and NFTs could shape the industry, the impact of digital fashion, and the potential for sneaker investing to expand beyond its current cultural and economic boundaries. By examining these trends, we can gain insights into what the next decade may hold for sneaker investors and collectors. Blockchain and NFTs, revolutionizing authentication and ownership. One of the most significant challenges in sneaker investing is the risk of counterfeit sneakers. As the market grows, so does the production of high-quality replicas, which can make authenticity difficult to verify, even for experienced collectors. Blockchain technology offers a promising solution to this problem. By creating digital certificates of authenticity linked to each pair of sneakers, blockchain can provide a secure, transparent way to verify a sneaker's legitimacy. Platforms like StockX and GOAT are already exploring ways to integrate blockchain technology to enhance trust and transparency in the resale market. NFTs, non-fungible tokens, are another emerging trend that could transform sneaker investments. NFTs are unique digital assets stored on a blockchain, and some companies are experimenting with NFT sneakers, digital representations of sneakers that provide proof of ownership, even in a virtual format. While these NFT sneakers can't be physically worn, they can be displayed in virtual worlds or on social media, adding value for collectors and investors who value digital assets. Brands like Nike and Adidas are beginning to experiment with NFTs, creating limited edition digital sneakers that appeal to both traditional sneaker collectors and tech-savvy investors. As the metaverse and digital worlds become more mainstream, NFTs could add a new dimension to sneaker collecting, blending physical and digital ownership. Virtual sneakers and digital fashion. The rise of virtual sneakers and digital fashion presents another potential avenue for the sneaker investment market. In recent years, fashion and gaming have increasingly overlapped, with brands creating digital items that players can purchase, wear, and showcase within virtual worlds. For instance, platforms like Roblox and Fortnite now feature branded virtual fashion items, and sneakers are a popular choice among users. These digital sneakers are often sold in limited quantities, much like physical sneaker drops, creating a sense of scarcity and exclusivity that drives demand. Virtual sneakers are particularly appealing to younger consumers, who are more accustomed to spending money on digital goods within games and social media platforms. The potential to collect and trade virtual sneakers in digital environments could open up a whole new revenue stream for sneaker brands and investors. In the future, it's possible that investors may even be able to trade shares of popular digital sneakers, creating a hybrid market of physical and digital assets. The potential of fractional ownership. One of the biggest barriers to entry in sneaker investing is the cost of acquiring high-value models. Fractional ownership, a concept that allows investors to purchase shares of a valuable item rather than the entire item, could make sneaker investing more accessible to a broader audience. Fractional ownership platforms, similar to those used in art or vintage car investing, would enable investors to buy shares in a limited edition sneaker without needing the capital to purchase the full pair. For example, a pair of original Nike Mag sneakers that typically sells for tens of thousands of dollars could be divided into fractional shares, allowing multiple investors to own a portion of the asset. This approach democratizes sneaker investing, making it possible for a wider range of people to participate in the market. It also offers liquidity benefits, as fractional shares are often easier to trade, providing investors with more flexibility in managing their portfolios. As more platforms adopt this model, fractional ownership could play a significant role in shaping the future of sneaker investments. Sustainability and ethical investing. As environmental awareness grows, consumers and investors alike are becoming more conscious of sustainability in the products they buy. Sneaker brands are responding by developing eco-friendly models made from sustainable materials and reducing waste in production processes. Nike's Move to Zero initiative and Adidas's partnerships to create sneakers made from recycled ocean plastic are examples of this shift. For investors, sustainable sneaker models offer a new opportunity to align their portfolios with their values. Sustainable sneakers may attract a dedicated consumer base, particularly among younger buyers, who prioritize environmental impact. This trend could increase the resale value of eco-friendly sneakers as demand for ethically produced goods grows. The rise of sustainable sneaker models might also lead to a new category of green investments within the sneaker market, where certain eco-friendly models command a premium due to their ethical appeal. Globalization and expanding markets. While sneaker culture has strong roots in the United States, it is quickly becoming a global phenomenon. Emerging markets in Asia, Europe, and the Middle East are fueling the international growth of sneaker investing, as more consumers in these regions become interested in collectible sneakers. In countries like China, where sneaker culture is rapidly growing, demand for popular models is high, and investors are willing to pay premium prices for limited edition releases. As the global demand for sneakers increases, investors may find new opportunities by catering to international markets. Platforms like GOAT and StockX have already expanded internationally, making it easier for buyers and sellers around the world to engage in sneaker trading. This globalization trend may drive higher resale prices for certain sneakers, especially those that have limited releases in specific regions, creating opportunities for investors who can identify and capitalize on regional demand. The future of sneaker investing is set to be shaped by technological innovation, shifting consumer values, and expanding global markets. Blockchain and NFTs are poised to enhance transparency and authenticity, reducing risks for investors while opening up new avenues in digital ownership. Virtual sneakers and fractional ownership models could make sneaker investments accessible to a broader audience, diversifying the market and attracting a new generation of collectors and investors. Meanwhile, sustainability initiatives and global expansion are likely to drive demand for specific models, adding both value and ethical considerations to the market. These trends suggest that sneaker investing will continue to evolve, becoming an increasingly sophisticated and multifaceted market. By staying informed about these emerging trends, investors can better navigate the changing landscape and identify new opportunities in this dynamic, rapidly growing asset class. In the next section, we'll bring all of this information together in a final recap and offer practical tips for getting started in sneaker investing, along with key takeaways for investors at all levels. Key takeaways for aspiring sneaker investors. Sneaker investing has emerged as an exciting and profitable avenue for those seeking alternative investments, blending culture, fashion, and financial potential. As we've explored, the market's unique appeal lies in its combination of tangibility, cultural significance, and rapid appreciation driven by trends, scarcity, and demand. With the right strategies and a keen awareness of market dynamics, sneaker investors can successfully navigate this asset class and potentially yield impressive returns. Key takeaways: know your market. Understanding the intricacies of sneaker culture and consumer trends is essential. Follow influential brands, track collaborations, and stay informed about market developments using resources like StockX, GOAT, and online communities. Diversify your portfolio. Balance high-value, quick-flip sneakers with long-term collectible models to manage risk. Diversification across brands, models, and even digital assets can strengthen your portfolio against market shifts. Time your buys and sells. Recognize when demand peaks, such as right after a limited release, for quick profits, but consider holding iconic models for gradual, long-term appreciation. Manage risks with reliable platforms. Stick to reputable platforms with authentication services to avoid counterfeit risks, and ensure proper storage to maintain the condition and value of your physical assets. Explore future trends. Stay open to innovations like NFTs, fractional ownership, and sustainable sneakers. These emerging areas could offer new opportunities for growth and diversification in your investment approach. Finally, sneaker investing isn't just about returns. It's about owning a piece of culture that reflects personal style and modern-day status. Whether you're a passionate sneakerhead or simply intrigued by this growing market, there's room for investors at all levels to make their mark. By leveraging knowledge, embracing trends, and managing risk strategically, you can build a sneaker portfolio that stands the test of time and trends in this dynamic, evolving asset class.